Hi, I'm Benis Kumar Moses, a behavior and finance expert. Today, let us unpack a surprising truth about investing: why consistent habits will always beat high IQ when it comes to building serious wealth. We're often told that to win at investing, you need to be the smartest person in the room, a financial genius who can predict every market move. But the reality, it's not about brilliance. It's about discipline. The most successful investors aren't the ones who make the most heroic trades, but the ones who stick to a simple, consistent plan. Let me paint a picture for you. Imagine two investors, Arjun and Meera. Arjun is incredibly smart. He follows the market obsessively, reads every financial report, and spends his days trying to time the perfect entry and exit points. He's always looking for that next big stock that's going to explode. Then there's Meera. Meera's approach is much simpler. She sets up an automatic investment into a few good funds every single month. Like clockwork. She doesn't check her portfolio daily. In fact, she only reviews it a couple of times a year to make sure things are on track. She ignores the daily market news, the fear, and the hype. Fast forward 10 years. Who do you think is wealthier? It's not Arjun, despite all his intelligence and effort. It's Meera. While Arjun was busy reacting to every market fluctuation, often buying high and selling low out of emotion, Meera's wealth was quietly and steadily growing. Her secret weapon wasn't genius. It was the power of habit. This isn't just a nice story. It's backed by behavioral science. We all like to think we have strong willpower, but the truth is, it's a limited resource. Relying on willpower alone to make good financial decisions is a recipe for failure. That's why creating the right environment is far more effective. Instead of trying to force yourself to save and invest, make it automatic. Set up a direct debit that moves money into your investment account the day you get paid. This way, the decision is already made for you. It's discipline by default. This is what we call removing friction. You can also use a technique called habit stacking. Link your investing habit to something you already do. For example, right after you pay your monthly bills, make your investment. The first action becomes a trigger for the second, making it a seamless routine. At the same time, you need to add friction to your bad habits. If you're prone to impulse spending, make it harder for yourself. Delete those tempting shopping apps from your phone. Set a daily limit on your debit card. Design your environment so that good financial behavior is the easiest path to take and bad behavior becomes a hassle. Ultimately, building wealth isn't a single act of genius. It's a boring, repetitive routine that you stick with for a very long time. It's about building a system that works for you so you don't have to struggle with decisions every day. Consistency is what allows the magic of compounding to do its heavy lifting. Remember, in both investing and in life, simplicity scales much better than complexity. Thank you so much for watching. If you found this helpful, please hit that like button and subscribe for more insights on building smarter financial habits. See you in the next video.